Hi, everybody. It's Erin Beck at Spechler and Beck Real Estate Group, and we are in December. It's December 1st. It's the last month of the year, and we just wanted to give you an update on what's been going on in the real estate market and what we see coming up. So let's take a look. We're going to talk about what interest rates are doing and what happened, all the talk about the housing crash, and then just what's going on for buyers and for sellers right now, and what are we looking at. So interest rates. Last week, we saw the biggest 1 week drop in a very long time into the sevens. So the low sevens. So that was a big positive thing for buyers to see out there. It gives everybody a little bit of hope that maybe rates are going to start coming down. We got the jobs report and the housing report, and investors flooded the treasury bonds with cash. And so when we see more and more money go into stocks and bonds, we're going to continue to see rates coming down. So that's what we'd like to see. But when will that be? Different economists are saying different things, but there's a small chance that rates will go down in the first quarter of 2024. That would be great if we started out our year with some low, fresh rates. However, it's more likely that it might be more like spring or summertime. So next year, I am hoping that we see lower rates, and that's what most economists are thinking we will see. Last year, we thought that rates would have to dip down to about 5.5% when the market really slowed down and buyers were on the fence. They were watching to see if rates were going to continue going up. We knew that in order for people to start really moving and making more offers again, we'd have to see rates at 5.5%. However, rates kept going up. So now it's like if rates are anywhere in the fives, I think we're going to start seeing more buyers jump in, because anything in the fives is better than something in the high sevens or the eights. So hopefully the lower rates will make the market kick off again. So what are some buyer and seller realities for buyers? Unfortunately, some are feeling pretty deflated. The affordability is at its lowest and interest rates are at their highest. What they're saying, why would I buy now? Can I even buy now? What do the numbers really look like for me? Will there be a housing crash? Some people are still saying this isn't sustainable. Affordability is so high or is so low that there's got to be a crash. There's got to be something that changes. But unfortunately, we've always said this, and so are economists. There's just nothing in the economy. There's not a great enough distressing catalyst that would make the housing market crash. Back in 2008, we had all of these people who had 100% financing. They didn't have any equity in their homes, and they were facing terms in their loan where their rate would become adjustable. And so they shot from these 5% rates up into 8%. And so people were losing their homes. They were walking away. There were foreclosures and short sales, and that flooded the market with supply, and we couldn't keep up. And so, of course, we had the Great Recession, and the housing market did crash. Now, though, supply is so low, so any flush of homes that would happen. I mean, we have the opposite of a flush of homes. But if we do see a new wave of homes come on the market, they're going to be quickly absorbed, especially in Santa Barbara, where demand is so high. Over 40% of homeowners in the country own their homes free and clear, and that was not the case back in 2008. So if people did have to sell for whatever reason, they've got a lot of equity in their home, and they're going to be fine. Homeowners are flush with equity, and they're sitting on low interest rates. So the only crisis right now is a supply crisis. There's just nothing on the market to sell. There's nothing on the market for these buyers to find. So we need to financially incentivize sellers to sell if they need to. If they're happy to stay where they are, that's fine too. But if they do want to sell, we've got to find ways to incentivize them. So of course, we need more affordability programs. We need some loan programs to help buyers get into the market, but we also have to incentivize sellers to sell. Did you know, and this is not political, this is just a fact, that the capital gains laws, where an individual can write off $250,000 and a married couple can write off $500,000 of their gains, that was based off of 1997, when the average home price was $140,000. So buyers or sellers are looking at a lot of capital gains taxes, and unfortunately, it's not creating them to move anytime soon. So what's our advice to buyers right now? I've been talking to a lot of you out there. We're having a lot of consultations. We are telling you, get ahead of the rush. Think about what that COVID market was like. There were so many multiple offers. There was so much cash in the market. And we're seeing that again, unfortunately. or fortunately, if you're a seller, but there is a lot of demand out there. And once interest rates come down, what do you think is going to happen to the market? Number one, prices are going to go up again. And number two, there's going to be a flood of buyers who are ready to jump back into the market, who've got new steam and are ready to go. Yes, there's a lot of cash right now. Of about a third of the offers right now are all cash. However, that statistic is kind of the same as before. Back when we had way more transactions a couple of years ago, there was a ton of cash offers. So there's still a ton of cash offers. There's just fewer buyers who are financing because of the high rates. So, but you, as a buyer, if we go back into that busy market again, you don't want to be in line behind all of the cash buyers. So I would encourage you, get in now. We always say marry the house and date the rate. Get in now, find something while it's a little bit less competitive, and then refinance. And here is some really cool news. There's some loan programs out there who are preparing to refinance in a year and waive all of the fees. I mean, you've still got escrow fees and things like that, but they're waiving loan fees. So if you buy a house now at a little bit of a higher rate, and then in a year rates drop significantly, there's some loan programs out there that will refinance you and they'll waive the cost of it. So that's something to talk to your lender about. As always, get fully approved buyers. Pre-approvals are great. We won't work with you unless you have one. And so we'll connect you with a lender and make sure that you're qualified and ready to write really great offers. But to be the strongest buyer you can, we really recommend that you get fully approved, which means you go through underwriting. And then when you write an offer, you can often not even have a loan contingency and you're almost as good as a cash offer. You're just as competitive. You don't have a loan contingency. So that's something you should talk to your lender about and of course, talk to us about. Our advice to sellers is demand remains high, especially here in Santa Barbara. Competition is low right now. There's just not a lot of homes on the market to compete with. So when we are pricing a home, we're saying, look, you're the only one in this price range, or that you're one of three in this price range. So that's good for you. Buyers are still very price sensitive. So it's really important that you price your home right. However, the demand is still there. And in the holiday season, a lot of people think, let's wait. That might be the case for some. But typically the market slows about 25%, but there's also less competition out there. If you think of it that way, your home looks amazing during the holidays with all the lights and the decorations. And the buyers that are out there are really serious buyers. So it is still a good time to sell. So if you have any questions, if you're a buyer or a seller, or you want to discuss what we think is going to happen next year, we do not have a crystal ball, but we are doing our homework. We're listening to a lot of great economists. I love Steve Thomas. And so we're getting lots of good information and we would love to pass it on to you. So have a wonderful holiday season. Enjoy the rest of 2023. We're here for whatever you need and we'll see you in 2024.